567 AM, Radio 3.
Good morning from me, Peter Lewis.
Money Talk on RTHK Radio 3.
It's coming up to 8:24. On the phone from Shanghai is independent economist Andy Shi. Good morning, Andy.
Good morning.
Now, we've got China's National Bureau of Statistics. They're releasing the official manufacturing and services PMI later this morning. In July, the composite PMI hit a reading of 54.1. What should we be looking out for, Andy, in this month's data, and what are you expecting?
Well, I think that the government probably would say a little bit higher than last month because of the export number. Export was higher. So I think that probably one tick higher than last month.
And we saw those industrial profits numbers last week. They've risen now for 3 consecutive months. Is that giving you some optimism about the recovery in China?
Well, the good news is that exports are doing well. The reason is not so good because other countries are struggling with the pandemic, and they are having trouble getting production going, like Europe and the United States. So China is kind of benefiting from other countries' troubles. But so there's a real economic recovery, and China is less service dependent than other countries. So it's less affected by the virus. But on the other side, we see that there is the deflation associated with upper middle class or white collar consumption, and there is the white collars have had income hit. It's still hasn't recovered. So we can see that. On the other side, we see inflation associated with the blue collar consumption because that China does have a structural labor force decline, and that the kind of blue collar inflation is a long-term trend. And
that's reflected in consumer spending, of course, which is still very weak, isn't it?
Yeah, I think so. I think that the white collar workers, in particular, like in this startup sector, which the government has encouraged, is very vulnerable because most businesses have no prospect of making a profit. So it's very much dependent on financial availability. And the government now is encouraging IPOs, trying to get these internet companies to get money in the stock market. Let's see if it helps.
And we've seen these banks report over the weekend their worst profit declines now in more than a decade because, in effect, they're being pressurised, aren't they, by the government to go and lend to smaller businesses to provide cheap funding. And as a result, they're struggling with higher loan loss provisions.
Yeah, I think the credit quality has been deteriorating for quite a while. And even a lot of internet companies, they say they do different things, but actually they make business from issuing these wealth management products and lending to small businesses, and the viability depending on issuing more and more wealth products. So kind of like a Ponzi scheme. It's the government that wants this to keep going because they think that the economy needs funding like that. So let's see how it goes. I think that the key issue is the government still does not have a long-term plan yet. And they're talking about internal circulation, and there's this new concept of like a big circulation. And it's kind of a new words, but I see very little substance in it. China's fundamental problem is imbalance. It's been going on.
When you say imbalance between what? Where's
between investment and consumption.
Oh, okay.
And right. China's investment is too big because the government is always pushing for investment, and the political incentive is for governments to push for investment. So the other side of investment push is less income for the people. So you can see that the disposable income as a share of GDP keeps declining. And now is maybe 42, 41, 42, 43% of GDP. And even it's such a low ratio, a lot of that goes into property. Property like at peak was selling at 17% of GDP. Most of that actually goes into the government's coffers because the construction cost is really relatively low. It's really land cost and taxes. So this is the issue that if you invest so much, you create over capacity, but then people don't have the money to spend. Then you have an imbalance. You have a balance problem. Then you become very dependent on export, like the U.S. market. So these, the issue is that the government has not thought through because the right thing to do involves scaling back the government. So that's why the government is struggling with that.
Andy, it's always good to talk to you. Thank you very much for your thoughts this morning. That's Andy Shi, who's a Shanghai-based independent economist.
You're listening to Money Talk on RTHK Radio 3.